There is no doubt that we are in an AI-driven economy, and for good reason. The promise of AI in terms of productivity gains is huge. So if we didn't have AI, we wouldn't look as good as we do now, and we wouldn't be outperforming the rest of the world. But we do have AI. So I'm not too worried that it's an AI-driven boom. What I would stress is this is a rational bubble, that a lot of money is being thrown at different AI actors at the micro level because the promise is so huge. That is a good thing. That's what distinguishes us from the rest of the world, because different AI companies are competing and excelling. However, at the end of the day, they're going to be just a few winners, a handful of winners, and therefore some of the investment will result in tears. But overall, for the economy, this is good news. It promises us significant productivity gains.
Okay, so that's the good news. Explain valuations at the same time that we have gold rising at the levels we do then.
Yeah, and the gold issue is very simple. The rest of the world, while they trust U.S. private sector, they are worried about the dollar. And you see this in the extent to which inflows into our markets from the rest of the world are hedged. So the rest of the world says, I want to go long U.S. enterprise, but I want to short the dollar. How do they diversify away from the dollar? They slowly buy gold. And if you look at the recent numbers, you have two drivers of gold prices, both of which are in play for a long time. You have central banks slowly moving from the dollar into gold, slowly, and you have institutional investors increasing the allocation to gold in their model portfolio. On top of that, you have speculators, so that means it's not going to be straight up, but it will continue to go up, in my opinion.
So gold goes up to what? And then how do you think about that in the context of Bitcoin?
So first, to what? It wouldn't surprise me if we see 5,000 this year. Bitcoin, the pyramid I just described for gold of central banks, then of institutional, and then of speculators, for Bitcoin, as you heard Anthony say, it is still evolving, meaning that the speculation side is much larger than for gold, and then the fundamental side is still smaller. So Bitcoin is going to be much more volatile. It will not have as yet the characteristics of gold. It needs to develop this fundamental holding, which it is doing, but it is way behind gold.
And then finally, Mohammed, I'm curious where you land on the private credit issue. There's some people suggesting there's cracks in that, and that therefore we need to be very mindful of those cracks. They could lead to other problems in the economy. Other people say, you know, private credit is effectively separated from the banking system. The bank earnings have been pretty great. A lot of people excited about all of the things happening in the markets right now. So IPOs and pipelines for M&A, banks should be sort of set. Are they?
So first, in terms of financial stability, Andrew, whether you call it cockroaches or ants, they're correct. We've seen a few strains. We are going to see more, but they're not termites. I want to stress. They're not eating away at the foundation of financial stability. These are isolated cases. They come in a period where people have stretched too far for returns. That's what happened when spreads compress. It pushes certain people out the risk curve, and they take on risks that they shouldn't. So I think of it as, yes, there will be more cases. I think Jamie Dimon is correct, but it's not termite. In terms of the system as a whole, not only it's not a problem of financial stability, but actually it's good. It's allowing certain companies to get financing they wouldn't get otherwise. And if you go to developing countries, if you see what's happening to credit in developing countries, that's a really good thing as well.